Hey guys, Jen here from Millennial Nextdoor. Welcome back to the channel. In this video, we're going to go over what is a bank statement loan for self-employed. Stay tuned. All right, bank statement loans. I put out a blog post on my blog Millennial Nextdoor, and I got a lot of feedback, especially on social media, so I thought I'd create a video to kind of go over it. A bank statement loan, also called a self-employed mortgage, is a form of alternative financing. So it's called an alternative loan. Now, a traditional mortgage loan and a bank statement loan are two different things, and the main difference are going to be the documents required for qualification. With a traditional mortgage loan, in order to get you qualified for the loan, you'll need to provide supporting documents to validate your income and employment. And this can include things like W-2s, tax returns, paycheck stubs, bank statements to verify your assets. Now, in some cases, these documents can be difficult for the applicant to obtain. For example, for someone who's self-employed, less than 2 years, it may prove difficult to qualify with self-employment income, as many lenders require business owners to have at least 2 years of employment history under their belt in order to use their self-employed income. So if you are a business owner with a new business under 2 years old, it may be difficult to include your self-employment income in your mortgage loan application. And so with this income being omitted from your loan application, that means that it's going to be tougher for you to qualify for the full amount of mortgage loan that you're looking for. So that's why people turn to these bank statement loans. Now, bank statement loans will require supporting documents in order to qualify for the loan, just like a traditional mortgage, but it's going to be more heavily based on your income flow and your bank statements. So that's going to be the difference. Now, bank statement loans are more risky than traditional mortgage loans. So to compensate for that risk, you will be seeing higher interest rates, usually starting at around 6% plus, depending on the lender and other factors. So keep that in mind. But if you need a home, if you're desperate for a house, if you need to find financing, this may be a solution with the opportunity to possibly refinance into a traditional mortgage in the future. Now, how do bank statement loans work? With bank statement loans, applicants use their bank accounts to validate income and cash flow, like I mentioned. So while a traditional mortgage would require tax statements and other income documents, those same requirements may not be needed for a bank statement loan. So it definitely offers some flexibility in qualifying for lending. Bank statement loans are usually going to be for people who have difficulty qualifying for a traditional mortgage. If that's the case, the bank statement loan can be a solution. It's for people who may have high cash flow or strong bank statements, but lack in other areas, like they may be new in business, like this example here. Business owners like freelancers, consultants, attorneys, investors, etc., can be likely candidates for this kind of loan, a bank statement loan. So some of the pros and cons. The advantages of a bank statement loan include less documentation and specific documentation not needed, lower credit thresholds in some cases with higher debt to income ratios, and then the drawback is, of course, the higher interest rate. Is a bank statement mortgage loan worth it? Perhaps. It really depends on your personal situation. You have to really evaluate all options and see if this is a loan that you and your family should pursue. It may be a good short-term solution with, again, the opportunity to refinance in the future into a traditional mortgage with a lower interest rate. That may be something that you can look into doing. Now, to find bank statement loans, let's head over to Google. They're also called non-qualified mortgages. They can be tricky to find sometimes. Not all banks offer them, and to get started, I'd recommend you contact your own personal bank to see if it's an option that they offer. If it's not, you can look at mortgage lending companies that specialize in mortgages. These are companies that do home loans only usually. So they offer some flexibility because they have lots of different types of home mortgage loans that they offer, including bank statement loans. Do you need a bank statement? Yes, of course. It's called a bank statement loan, so you will need to have your bank statement. How many statements you'll need will be dependent on the lender that you work with. The mortgage lender is looking for proof that you can support paying for your mortgage payment, so they are going to ask you for your bank statement. And getting your actual bank statement should be a pretty simple process. If you don't already get them every month, which you probably do, you can just mail or, pardon me, you can actually call or email your lender to get your statement. You may even be able to get it online. Again, if we look at the rates between the two, you're going to have a lower interest rate with a traditional mortgage loan. It'll be at least a few percentage points higher with the bank statement loan in many cases. Should this scare you away? Maybe. Again, consider all options and determine if the bank statement loan is going to be a good fit for you and your family. Are bank statement loans right for you? This type of mortgage loan may be right for you depending on your situation. As with everything, you should look at weighing the pros and the cons to see what falls more in your favor. Sometimes it's better to wait until you can get past the hurdle that's making it difficult to qualify for a traditional loan. In other cases, you may need to pursue alternative financing. To get a bank statement loan, this is what you do. First, you find a mortgage lending company that can offer the bank statement loan to you. Review the terms thoroughly, complete your application, move forward with the application process, work with a lender to get qualified, find your property, move forward to closing. All right, and that wraps it up. What do you think? I'll leave a link in the description box to this post on Millennial Nextdoor in case you want to read the entirety of it. You can see it goes pretty in depth here. Lots of good stuff there for you. I hope you found this educational, and if you have any questions for me, please comment below. Don't forget to like this video, subscribe, turn on notifications so you can be alerted of when I put out new videos just like this one. Thank you so much for watching. I'll see you in the next one. Bye.